What's going on, everybody? It's Stas here. Welcome back to another video. So in today's video, I'm going to be talking about the SMA indicator and how you can use it when you are trading stocks. So for those of you guys that are new to my channel, my name is Stas and I make videos dealing with swing trading, day trading, long-term investing, and my personal philosophies and strategies when it comes down to investing and trading in the stock market. So if that's something that you're interested in, guys, if you want to learn more about the stock market, investing, and trading, feel free to drop a like, leave a comment, and subscribe, and join the Facebook group as well as the Discord group chat. We're active, very active in those two communities, posting there daily and pretty much talking all day in the Discord group chat. So get in there if you guys want to learn more about stocks, see callouts, and talk to the members in the group. And follow my Instagram and Twitter if you guys want to as well. All of the links are down below in my description box. So let's hop right into the topic of today's video. So what is an SMA indicator? The SMA stands for Simple Moving Average. And this indicator, guys, and I personally use two SMA indicators, a 50-day SMA indicator, which is this green one right here, and the 180-day SMA indicator. And what these indicators do and what their purpose is to show us, the traders, right, how the price has been moving over a specified period of time. And these two indicators, guys, both the 50-day and the 180-day SMA indicator, they serve two different purposes. So the 50-day SMA indicator is a quicker reacting indicator, right? Meaning that it has less data points to calculate that simple moving average. And by this, I mean when you're calculating a 50-day SMA indicator, you're taking the 50 previous trading days, right? You're taking those prices, adding them all up together, and then you're dividing it by 50. That's pretty much how this indicator is, calculated, right? And this is a quicker moving indicator, right? Which means you can use it better in the short term due to there being less data points versus the 180-day SMA indicator, which is a slower reacting indicator, but it gives us a better understanding of the longer term perspective. If we're looking on this 180-day chart, this one is calculated by taking the sum of the stock's prices over the previous 180 days and then dividing that by 180. So you guys understand pretty much why, the 50-day is a quicker reacting indicator due to there being less data points. And if you just watch charts throughout the day, you guys can see this for yourself, right? And if you're more of a short-term trader, short-term swing trader, the 50-day SMA might be the best tool for you. But if you like swing trading stocks for, let's say 2, 3, 4 months, holding them for a longer period of time, the 180-day SMA could be, the better tool for you. So, pretty much, guys, we use these indicators to really dictate the price movement of a stock. And it gives us, it gives us information, right, on whether or not a stock is in a bullish or a bearish pattern. And we can talk about something cool, a basic thing about these 50-day and 180-day SMA indicators is you can use them as buy or sell signals, right? And we can talk about that very quickly. And I have SAP here, SAP stock, which is a great example of this buying indicator that I'm about to show you. So, a buying indicator with the SMA indicators, right, is when a 50-day SMA indicator crosses above the 180-day SMA indicator. And if you're using different days in terms of the 50, right? Let's say you're using a 30-day SMA indicator and a 120-day SMA indicator. This, this applies to pretty much the smaller indicator, right? If the smaller indicator is crossing above the larger indicator, that means it's a buy signal. Should you buy solely due to this? Absolutely not. But it should give you a better understanding of a good opportunity to buy, right? And we can see that right here. This green SMA indicator that I have drawn out, or that I use on my Think or Swim setup, is crossing above this 180-day SMA indicator. So this is a very good sign that SAP could potentially have a good week or the next 2 weeks in terms of its stock price going up. And this is a good signal that SAP is slowly starting to consolidate, bounce, and potentially has room to push up because the 50-day SMA indicator, again, is a quicker reacting indicator, and this one's pushing up higher above the 180-day SMA indicators. I hope you guys, understand what I'm talking about, and I'm going to show you guys more examples of this later. So let's say the opposite now, right? Really understanding if a stock is going down in price, if it's in a bearish mood, is if the 180-day SMA indicator, or excuse me, if the 50-day SMA indicator is breaking below the 180-day SMA indicator. So let me say that again. If the 50-day SMA indicator is instead of pushing up above the 180 SMA indicator, it's pushing below the SMA indicator, 180 SMA indicator, that means it's in a bearish pattern, and it might be a better opportunity for you to sell and look at something else. But again, do not just base your decisions off of this one little trick / technique, because you have to, have a sound decision when you're trading with multiple different factors that are pointing for you to, trade that stock, right? You don't just base your decision off of one little thing. But let's look at some other stocks. This is completely off of the top right now, so I'm going to try to find some stocks that, show this buy / sell signal of the SMA going below the other SMA. And this is a good example here, right? ARRY. What we notice in ARRY is that it topped off at $20. We saw the pullback in the stock. And what do we notice right here, guys? We notice that 50-day SMA breaking below the 180-day SMA, which means that this one could be pushing down. It could be in a bearish formation, and it could be time to sell. So if you were trading ARRY at this particular moment, right, in the middle of July, you could have seen this and been like, okay, it's time to sell. And you would have been right? Because we see from here, it's been pushing down in price because this broke below, the 50-day broke below the 180-day. So you guys understand how this works? It's a pretty cool tool that you can use, especially if you're doing analysis on the longer term charts here. And it really gives you, an opportunity to analyze whether a stock is going up or down in price over the long term. And if we're looking at this stock in particular, right, the 180 SMA is curling down. It's looking like it's slowly starting to push down. But we notice here that this 50-day SMA has found a bottom point and it's slowly starting to push up with the candlesticks consolidating here. And again, guys, the 50-day SMA is a quicker reacting SMA indicator, right? So since this is showing that it's consolidating and pushing back up, this one does have potential to bounce here and push up, although this one shows that it's curling down in price. So you guys understand what I'm saying in terms of the SMA indicators. Make sure to drop a comment down below if you understand what I'm saying or if you have any other questions. So let's take a look at some other stocks really quickly before I send you guys on your way. So, okay, see, this is another example here. The 50-day broke below the 180-day, and pretty much from there, it's been in a bearish pattern, right? Bearish pattern here on BOX. Let's just check out some other ones. Here's one of an uptrending pattern, of one that's in a bearish formation with, or not a bearish, a bullish formation with a buy signal, right? We see the McDonald's stock here. The 50-day broke above the 180-day, and from there, guys, it's been uptrending in price. So this is a very good sign that McDonald's could be at a buy range right now, and that is pushing up in price for the long term. But again, do not solely base your decisions off of one little trick. You got to use a bunch of different decisions, a bunch of different sound theses, whatever you guys want to call it, sound, trading tools that you use, sound trading tactics, for you to really form a decision on whether or not a stock is a good buy or sell. So that's pretty much it for today's video, guys. If you found value in this video, feel free to drop a like, leave a comment, and subscribe, and follow me on Instagram and Twitter, and join the Facebook group as well as the Discord group chat. Both of those are linked down below in the description box, and make sure to do your own research when it comes down to investing and trading in the stock market. Do not buy or sell based off of my opinion or anybody else's opinion out there, because that's not how you're going to become a self-sufficient trader over time. And that's the whole entire goal and idea of this channel. So I'll catch you guys in the next video. Have a great trading week. Peace.